Hello, everybody, and welcome to our show today. I'm really glad everybody could join us. So today we're going to be talking about 5 of the easiest ways for you to get business funding, how to get credit lines, how to get loans, some of the easiest paths out there to do so. So by the end of today, or by the end of this, you're going to know at least 5 ways to get financing. Even if you have credit issues, you don't have collateral, you're a startup, we're going to dive into solutions that can work for you. So for those that don't know me, my name's Ty Crandall. I'm the CEO here at CreditSuite. At CreditSuite, this is what we do. We help businesses get capital by helping you improve your fundability to become more lendable, by helping you access business credit for your EIN that's not linked to your personal social, and by getting access to all kinds of loans and credit lines in one place. So if we can help you along the way, feel free to give us a ring, 877-600-2487, or just go right to get approved at creditsuite.com/get funding. Okay, so look, if you're looking to get money for your business, you're probably trying to figure out where to go. What documents you're going to need? Do you need good credit? Do you need to have financials for your business? Well, that's exactly what we're going to talk about today, is all the things that you're going to need, or the few things you're going to need to actually get approved. So typically, if you're going to big banks, commercial banks, okay, and we call these conventional lending rules, okay, then in that case, you're going to have at least 2 to 3 years worth of tax returns. And typically, it's going to be about 3 years of tax returns. Now, if you're lucky, you may get a single credit card at the big banks, okay? But over 89% of applicants that go there end up getting denied. And this is an interesting statistic because you have to keep in mind that most people never even apply at the bank because the documentation requirements are so stringent, or they know they won't get approved. The people that get together all the documentation that think they're going to get approved, nearly 90% of them are actually getting denied, okay? And so it's not applications just for startups. I mean, these big banks just are not the sources to go through unless you're really, really, really well established. And that's because they're offering SBA loans. So SBA loans are not easy to qualify. I mean, first you have to qualify with the lender, then you have to qualify with SBA. So you got to face double qualification. And the problem there is they're looking at every aspect of the owner and the business. I mean, they're looking at your resume, they're looking at your experience, they're looking at your personal tax returns, your personal banks. They want all the information on you and the business to make that decision. And to be approved, all aspects of your business and personal life have to be really, really, really straight up, which means your own personal financial statement has to be strong. Your own personal credit has to be strong. Your business credit has to be strong. Your business financials have to be strong. These big banks, it's tough to qualify because, again, you're qualifying through the bank and through SBA, and you have to qualify and your business has to qualify. So if all of that stuff isn't perfect, then it's very, very tough to get approved. It's nearly, if not completely impossible for a startup. As a matter of fact, I'm not one to say the word impossible, but it is impossible for a startup. You can get a micro loan through SBA, which we'll talk about a little bit later, but you can't get a regular SBA loan if you're coming in as a startup. You just can't do it. There's just too many factors to be approved. Okay, so this is where you've got to be looking at these alternative lending sources. Let me give you an example. We just finished an application where somebody came in, business credit was strong, personal credit was very, very strong, business financials, everything was great, but what the lender didn't like was on the LexisNexis credit report, they found an old judgment that wasn't paid. And this thing was over 10 years old, didn't even show on the consumer credit reports. And they made the person use their home as collateral because of that one judgment. And it took the underwriting process and approval process to nearly 3 to 4 months to get done. So again, if every aspect of you isn't perfect, it's really tough to get approved. And in that case, the person's consumer credit was impeccable. This was something they didn't even know about on their LexisNexis credit report. So cash flow financing is often not an option in a lot of cases, especially if you're a startup. It's not an option, at least for everybody. Okay. Now, when we talk about cash flow financing, this can be referred to as a lot of things: cash advances, merchant cash advances, cash flow financing, revenue lending. A lot of those things are terms that it goes off of, but it's the same concept. They're looking at your bank statement. They're determining that you manage your bank account responsibly because you don't have non-sufficient funds and overdrafts, and you have positive money in the end of your bank balance every month. And what they do is they make a decision based on how you manage your bank account of whether you should be approved and how much money you should be lent. Problem here is that you've got to be in business, almost all lenders, for at least a year to get approved. They want to see over $10,000 a month in revenue as well. Now, let me say there are exceptions here. So if your revenue is really strong, you might get past the time in business requirement. If your time in business is really strong, you might get past the revenue requirement. There are compensating factors, but most of them want this criteria. So this isn't going to work as a startup. This won't work for startups, but it works really well for people that have credit issues. So even though cash flow financing is not an option for somebody that's just starting because they're looking at your cash flow and you don't have that yet if you're just starting, it is a pretty good option to consider if you do have credit issues. You just have to have some time in business and you have to have some revenue to be able to qualify. Now, private investors are another way to go. With private investors and venture capitalists, that's something to consider. But you have to keep in mind that these guys are looking for something very unique. You know, a lot of times with private investors, money, let's set aside venture capital, they want to see tax returns. Okay, they want to see profits. They want to see revenues. They want to see your business growing year after year. If you look at venture capital, well, they're only going to help you if you have a really groundbreaking idea or product or service. Okay, they want their money back in 3 years ultimately, and they also want a major chunk of ownership, and they want to sit on your board and control what's going on. So if we think about Airbnb, if we think about Uber, these are the type of people, these are the type of unicorn companies that venture capitalists are really looking for. They're looking to take risks on things that are very unique, very different, but if that thing tanks off, they can make a ton of money and exit in 3 years. So if you don't have a really unique concept or groundbreaking idea like an Airbnb or an Uber of the world, and you don't have something that could explode into tens, if not hundreds of millions of dollars in 3 years, this isn't an option for you. Now, if you do have that, well, then venture capital is a great option for you. So let's talk about some ways you can get money, okay, when you need it, without losing part of the ownership and without waiting to try to get approved for conventional loans or SBA loans. Because again, all these sources I've talked about can work in those individual circumstances I outlined, but outside of that, it's just not going to work. So my favorite financing for startups is called UBF, Unsecured Business Credit, okay, or Unsecured Business Financing. And these are basically credit lines that you can get even as a startup. There's no collateral. They're unsecured. You can get approved for about 5 to 8 times the amount of your highest credit card limit now. So if the highest credit card you have on your personal credit is 10 grand, you can get about 50 to 80 grand with this kind of financing. Okay. The rates 0% up to 50 grand. That's a mistype. You can actually get up to 150,000 in financing and get 0% rates for about 6 to 18 months. And you don't have to supply tax returns or bank statements to get approved. So super simple. So when we talk about no doc financing like this, no doc financing works really well for startups because you don't need tax returns and you also don't need to have any kind of bank statements to get approved. Now, a lot of these credit lines that you're getting with this program report to the business credit reporting agencies. So you're building your business credit, which makes you more lendable, helps you access more money for your business without the guarantee and credit check while getting access to these credit lines at the same time. Okay, so it helps you get access to even more money in the future while getting access to these high credit lines right away. And again, with this program, you're usually able to get many times more than you get on your own, and you're able to take cash out as well, which is really nice. So when I think about credit cards, I think the benefit is I can get 0% rates for 6 to 18 or for 0 or 6 to 18 months. But then when I think about the benefit of credit lines, I could take all the cash out without paying a high 20% interest rate for doing so. Well, that's kind of the nice thing about this. It's a hybrid. It's a combination of both. You get the benefit of credit lines where you can take all the cash out. You get the benefit of credit cards where you get 0% for 6 to 18 months. So really, really well for startups because you could grab the cash and then you can also not have to pay really high payments because your interest is 0. So there's no impact on your personal credit with this type of financing because these credit cards report to the business credit reporting agencies, not the personal. But in order to get approved, you got to have good credit. Look, for any kind of lending, you need a strength that makes you lendable, whether it's collateral or maybe it's cash flow, or in this case, it's credit. But you have to have something that makes you strong enough to get a loan or a credit line. If you don't have that, no worries. That's when you build business credit. With this program, you're going to need about a 700 FICO score or higher, or a guarantor that has one. So maybe mom, maybe dad, grandpa, grandma, a potential investor. Like I've said before, 75% of small business owners get their startup capital from friends and family. Well, it's easier to get mom or dad to let you use their credit to get credit cards and credit lines that only report on your business credit reports, not their consumer credit reports, than it is for them to give you $50,000 to $250,000 in cash. So again, makes it really convenient for you to bring in guarantors or people that will help you get the money without hitting them up for actual cash. So with good personal credit, then again, you can get these with a personal guarantee. And then eventually you'll build your business credit so you can get access to more without the personal guarantee. So one of my personal favorite credit lines is an AI credit line that you can actually get approved with at creditsuite.com/fundbox. creditsuite.com/fundbox. We have a special link there. We are their biggest supplier of loans as an affiliate. So again, we get some breaks that we pass on to you, and you can go to creditsuite.com/fundbox to be able to get that. So they offer one of the best and easiest credit lines I've ever seen to get. Okay. Your company can get literally approved for up to 30 grand in about an hour's time or less. Sometimes a little bit more, but again, about 1 to 2 hours is all it takes to get approved. How's that possible? That's what the AI comes in. Artificial intelligence is now making an impact in our world, in the business scene, because as AI comes into the business scene, what's happening is it's allowing you, the AI is underwriting your bank statements, your QuickBooks accounts, all these things digitally, so you don't need to supply physical statements. So what's nice about this is it's looking at your revenue for approval, but you never need to supply bank statements. For most cash flow financing, you need 6 months bank statements, 6 months merchant accounts. You don't need any of that with this. Okay, that's why the approval is so fast. You give them the login credentials to your bank account. The technology electronically logs into your bank account and gets all the data they need without you supplying statements. That's why the approvals are so quick. Now you can get up to 100 grand, we found, if you supply financials, which are tax returns. And if your business is generating some serious revenue, 200, 300,000 a year, then you're able to get approved for a $100,000 credit line. And by the way, this is what we have with Fundbox. We have a $100,000 credit line. We started with 6 grand. We supplied tax returns. They gave us 30. We used it. We went back for more and they gave us 100. And we use it and reuse it all the time to do all kinds of big moves. So again, something that works very well for us and has worked very, very, very well for our clients. No personal credit score requirements. Sometimes on smaller amounts, they might not pull your credit, but on larger amounts, they now do pull your personal credit. They just basically want to connect to your business bank account and electronically, digitally look at what all these cash flow lenders look at. Are you managing your bank account responsibly? Again, you can get approved right here at creditsuite.com/fundbox. So will this work for you? It's pretty simple. Here's what it takes. You need to be open at least 3 months. You need to have consistent revenue going through your bank account now, and your bank account needs to look legit. And by legit, I mean you can't have a bunch of non-sufficient funds. You can't have negative balances at the end of every month. The bottom line is, no matter what kind of loan or credit line you go to get, what they're caring about most is your ability to repay them. So if you look at your bank statement, does it really reflect that you could pay back a loan or a credit line? If you're negative half the time and you're negative at the end of every month, well, the answer is no. But if you're managing a bank account responsibly, more money going in than going out, you're not overdrawing the bank account, you're ending with some kind of positive balance, well, those are the things that they're really looking at to determine approval. So again, pretty cool, right? 3 months in business, some revenue, and you can get an actual real working capital credit line here. One of the easiest credit lines that we've ever seen you have the ability to get. We talked about revenue lending financing. Okay, this is basically where you're selling a percentage of your revenue versus an actual loan. Okay, and we talked a little bit about this. This is really cash flow based financing, where ultimately what's happening is you're basically using your revenue to qualify. But again, they're going to typically look at your bank statements. They're going to typically want that 1 year in business that we discussed. So Square and PayPal, they offer both of them offer loans, and a lot of them with no personal credit checks. Okay, this is a great option. I recommend everybody immediately from the inception of your business, you set up a PayPal and Square account, because what's happening with AI now is people like companies like PayPal and Square, they have so much information about you. Think about PayPal, for example. Right? If you have a bunch of transactions going through PayPal, they see how much money you have going in every month. They see how much money you're taking out every month. They see how you're running and managing your business and the ebbs and flows just based on how you manage your PayPal account. So they're able to take that data, plug that data into their algorithms and make pretty specific or get pretty accurate idea of whether you should be lent money and how much money they should be lent. It's super simple to get. Again, 3 months into having these kind of accounts, these kind of loans can become available for you, and they're dependent upon the sales that you have going through Square or PayPal. So if we look at Square, they offer loans from $500 to 100 grand. Eligibility depends on your history with Square. Okay. So again, it's not for a brand new company, but if you've got at least 3 months worth of history with Square, it could definitely work. So squareup.com/capital is how you can actually get approved for them. When we look at PayPal, they offer a maximum loan amount of 30% of annual PayPal sales. Let me tell you why this is a big deal. They're doing the same thing revenue lenders are doing. They're looking at your revenue. They're determining how much money you process every month, and they're giving you a percentage of that revenue. Revenue lenders, that the most of them that are out there, cash flow financing lenders, merchant cash advances, all those type of sources, they're typically going to give you 10 to 12% of your annual revenue, 10 to 12. PayPal will give you up to 30%, nearly 3 times as much money as any other cash flow financing lender. That's why I love PayPal, because in a lot of cases, they charge a $500 flat fee or less for the loan amount. Some cases, they don't charge interest. A lot of cases, they don't pull credit, and then they'll lend you 3 times the amount. I mean, almost 300% more than the other lenders in their space will offer. Again, $5,000 to $500,000 is what they'll get. Well, no, they're way more, right? Square, we talked about, goes up to 100. They go up to 500,000, and you got to be in business at least 9 months. But again, as we talked about with Square, sometimes even with PayPal, even 3 months in, they'll consider working with you. They just need enough data to have history. So if you have been open 3 months and you only have 5 transactions each month in your bank account or in your PayPal account, that's not going to be enough. But if you've been in business 3 months, 6 months, and you've got hundreds of transactions, that could be enough data for them to then process and make a decision. So another one is account receivable financing, AR financing, or sometimes called factoring. And this is when you're letting your customers pay you on terms over 6 months, 7 months, 8 months, 9 months. But instead of you waiting 6 months, 7 months, 8 months, 9 months to get paid, the lender gives you 90% of that money, boom, right away in 24 hours. So let me give you an example. Here at CreditSuite, when customers enroll with us to build business credit, where we help them condense years of that process to only months, sometimes they pay us over on terms, over 7 months. So what happens is you come in, you say, look, I want to enroll with you guys. I'm going to pay you over 7 months' time. We have to wait 7 months to collect all of our money. What AR financing does is we could take those receivables, we could sell them to an AR financing lender per se. And then what ultimately happens is, let's say the sales price is $4,000. Let me just make up a number. So instead of waiting 7 months to get all of our $4,000, in this case, the lender, well, let's say $1,000. Well, let's stay at 4. So $4,000, instead of waiting 7 months to get paid that $4,000, the lender would actually give us $900 right away. So that's 90% of that money right away. So that's what, $3,600. So instead of us waiting 7 months to get paid our full $4,000, the lender would give us $3,600 the next day. And then they would give us the remainder of it once they take out their fee and once the actual customer pays back those invoices over that 7 months time. So you can imagine the difference there, right? You can either come in and pay us over 7 months where we're collecting $500 a month, or, and we can the next day get $3,600 advanced to us, and then we pay we get paid the rest minus the fee once you as the customer pay back that invoice. So the nice thing about this is even as a startup, you need to start letting your customers pay you on terms if you have higher price products. If you don't have higher price products or service, make one. You should always have a higher price product and service and a lower subscription with everything you sell. Okay. That's just personal advice from what I've seen work very successful and what is recommended out there in the business space. So for example, at CreditSuite, if you enroll with us to be a partner and spend $4,000 per se, then you're going to come in and have an opportunity to get a bunch of extra features with our executive program and make money on funding that your customers get and everything else for only $99 a month extra. We have a higher price product. We have a subscription upsell that goes with it. You should consider doing the same thing. So when you have higher price products and services, even if it's not really high price, it's hundreds versus thousands, you let your customers finance on terms, they're more inclined to pay. More people are going to buy because more people are able to finance the money over 6 months, 7 months, 9 months, 12 months, then have all that money to pay you up front. And this allows you to let your customers pay you on terms, and then you still get your money right away. So you get the best of both worlds. Now, as I mentioned, you can get up to 90% of those receivables advanced to you within 24 hours. The rest gets to you once those invoices are paid. The first time you do it, it takes a couple weeks to get through the process. Once you do it, then after that, it's only 24 hours. Every time you submit account receivables, they usually will fund them the next day. And the rates on this are super cheap, as low as 1.33%. And consumer credit does not matter, nor does cash flow. They don't care about your credit. And they don't care about your cash flow. So you can get it even as a newer business. And again, your consumer credit, even if you have issues there, doesn't matter. Now, another option, of course, is building business credit, because again, you don't need to have good FICO scores to build business credit. If you don't have credit, if you don't have good credit, if you don't have cash flow, if you don't have collateral, there's no lenders that are going to give you money, but you're still able to get business credit. If you do have cash flow, credit, or collateral, and you are able to get money, well, business credit's still important because it opens up the ability for you to get even more money and get it at better terms. So you need to be building business credit, because if you want to get away from personal credit, if you want to get away from personal guarantees, if you want to get away from personal credit checks every time you go to do credit cards and credit lines, building your business credit becomes essential. That's what gets you a credible profile for your business, where you as an individual isn't needed anymore. So this can help you at any stage. You can get it even as a startup business. And you can get if your EIN that's not linked to your social, without that guarantee, without that personal credit check, even as a startup. So very nice to have. Okay. It's also an easy way, as I mentioned, to get it when you don't have the collateral, cash flow, or credit that's used for most other kind of financing. And if you don't have a guarantor and you're stuck, you're still able to come in and get this. So business credit, there's multiple different kinds of credit you're able to get. The first is called vendor credit. It's very easy to get, no consumer credit pull. You're going to need about 5 to 8 of these accounts to move on to the next step. The next step is called the retail credit tier. Okay, this is where you're able to get retail credit at places like Walmart, Amazon, Best Buy, Sam's Club, Costco, almost everything in between. So again, what I like to tell people, and this is where I see so many business owners mess up, they try to go get a credit line for 50 grand to start their business. And they say, well, it's only 50,000. Well, if it's only 50,000, then you should have only 50,000 cash on hand. Well, you don't. Well, that's because 50,000 is a lot of money. And for a lender to loan you money based on a pipe dream that they don't have any evidence is going to succeed doesn't make any sense in a lot of cases. But you're able to come in and use business credit for most of what you need without needing that credit line. So for example, you really need to break down exactly what you need for your business. So here at CreditSuite, we're an office-based business. So what we need to run our business is we need computers, we need paper, we need a printer, we need all those kind of things, office desks, we need office chairs. Well, everything I just described to you, we buy through HP, we buy on Amazon, we buy through Walmart, through IKEA, through Staples, whiteboards, everything in our office is through those places. Well, I don't need a credit line and a loan to buy any of that stuff. I need a credit card. I need a Staples credit card. I need a credit card for Best Buy. I need a credit line at HP so I can go in and get my computers, right? I need a credit line at Amazon so I can go get paper and Post-it notes and all that kind of stuff. Everything I just described could be built using corporate credit cards. And the nice thing about corporate credit cards is, think about what I just said. There's no credit check. There's no collateral requirements. There's no cash flow. You can get it as a startup. And if you build those 5 vendor accounts, you can get to this tier in 60 days, 90 days, 2 months, 3 months. So you can get this money really quick. And again, Amazon, Walmart, all these places sell almost everything you need to buy. So it makes it easier to get loans and credit lines. Now, when you have about 8 to 10 accounts, well, then you can get what are called fleet credit accounts. Chevron, Sunoco, Costco, Love's, Pilot, Flying J. Now, if you're like me and you work in an office, you don't care. You don't need gas cards. But if you're in the transportation industry, like a lot of our clients are, well, then this makes all the difference. To fill up a big rig is $600 to $1,000 for gas. So to be able to come in and get gas cards for all your maintenance, your repairs, your fuel, is the difference between how much work you can take on. So fleet cards are the next step. And then with 10 to 14 accounts, then you start to get to the Visa card, the MasterCard. Now, I will warn you, don't come into this and try to get to the end goal. People fail building business credit because they try to get to the Visa card. Why do you care about the Visa card? Again, almost everything you need to buy, you could buy at Amazon, you could buy at Staples, you could buy at Best Buy, you could buy at Walmart. The Visa card should be only the things you can't buy there, like for marketing from a marketing company or things like that. And again, there's even companies out there that do SEO and website building using vendor accounts that our clients have access to as well. So again, cash credit, you get to in about 10 to 14 accounts. You start to get the Visa card, the MasterCard, the credit cards you can use anywhere versus just the specific store credit. So to recap, it's not easy to get funding from the big banks. It's not the place you're going when you're looking for the easiest way to get money. Okay, unsecured business financing is a great way to go. It's the best program I've ever seen for startups because again, you can get up to 150 grand at 0% and take the cash out. That's ridiculous. And it's very, very, very possible to do. A lot of our clients are getting the 50 to 150,000 in approvals. And again, you can get it with a personal guarantor, even if your credit is in that good. Okay. AI credit lines are great too. There's many sources out there. I gave you the Fundbox. If you go to creditsuite.com/get funding, we have many other AI-based credit lines that are a little bit different. Some of them are up to 150,000 versus 100. Some of them give you a year to pay back the money versus 6 months. So they're all a little bit different. So make sure you go to creditsuite.com/get funding, and we'll be able to give you an idea of the options that'll work best. But what's nice about AI credit lines, they're so fast to get approved and fund because they're using artificial intelligence to underwrite versus manual underwriting. So this is money you can get same day or next day. Revenue lending, great solution if you have revenue but have credit issues, because this is, again, fast, easy money. 72 hours, you get the money into your bank account. About 10 to 12% of whatever revenue you have is what you can get. And then again, we also, with revenue lending, we talk about PayPal, we talk about Square, where you can get up to 30% of the money you have going through your PayPal Square account without credit checks, with very small fees, with even sometimes no interest. So many different options there we discussed. And you should always be letting your customers pay you on terms, period. Unless you're selling something really cheap, like $99 a month, you should let them extend out how long they pay you, because that creates an asset that you can then borrow money against. It makes it more convenient for your customers to pay because they can pay on terms. And then it also works really well for you because you have an asset you can immediately get money against. And AR, account receivables, are the #1 asset used by SBA lenders as well. So if you want to get to a point where you qualify for an SBA loan, they will require collateral. Account receivables work as a really good way for you to be able to get the collateral that you need. And then, of course, business credit works regardless of cash flow, regardless of credit, regardless of collateral. This works really well for you as well, because anybody can get it. And let's be honest, 80 to 90% of whatever you need to buy to set up that business, you and I both know, you could buy at Amazon, you could buy at Walmart, you could buy through retailers. You don't need physical cash to get it. So another great option for you as well to consider. So think about it when you're working with us. Just so you know, we work with every legitimate funding option in one place. We're one of less than a handful of sources in the country that does that, where you don't have to worry about what kind of these funding you may qualify for. We deal with them all. I just gave you 5. We have, like, I don't know, many times that amount of lending programs available. You don't ever pay us fees. We don't charge you a dime. The lender gives us a referral fee in some cases when we refer the loan to them, but that costs you nothing. As a matter of fact, it's cheaper for you. We do so much volume. We have lenders, we do $1 to $2 million worth of transactions every single month. So you can imagine, if you walk in to get a $40,000 loan and we send them $1 million worth of business, who do you think they're going to give the better rate to? They give us the rates, we pass it on to you. So not only do you not pay fees, you get lower rates because we get volume discounts, and we give you the blueprint you need to get the SBA loan. We're not going to just come in and get the money you can get now. We're going to tell you the next step and the next step and the next step to step up to term loans, to lines of credit, to SBA loans, so you can get the kind of financing longer term that you want to get as well. Our goal is simple. You have an accountant, you have an attorney, do you have somebody in your space that helps you with funding whenever you need it? That's what our goal is to be that source so you never need to look for funding again. So if you count them, we talked about more than 5 different options to get funding for your business. But if you're looking for more different ways, then make sure you subscribe on YouTube, check out our channel. If you have questions along the way, give us a ring, 877-600-2487. Email us, info@creditsuite.com. And don't forget, at the top right of our page at creditsuite.com, you can access all of our social media links. There, you'll be able to access our daily tips on places like Twitter and Instagram. You'll be able to go live with us on Facebook, where we answer questions in real time. YouTube, we go live weekly as well. And we also have our podcast that you can listen to on the go. So if you're listening on the podcast, if this all makes sense, if you got some good ideas, leave us a positive review. We appreciate that. If you're watching on YouTube, then subscribe, like the video. Let us know we're on the right track. And make sure you check out our channels and our podcast for a lot more information on many other ways to be able to get money from your business, for your business, including venture capital, including angel investing, and many other programs that we didn't dive into and talk about today. So make sure you check it out on our social media links at creditsuite.com. And don't forget, to get approved, you can go to creditsuite.com/get funding. A handful of questions we're going to answer, or you can ask or answer, and then we'll determine all the funding you can qualify for now. Thanks, everybody. Have a great day.